something is happening with Shiba Inu that most traders have already missed. The token is sitting at a make or break level that has not been tested in nearly 2 years. If this support crumbles, the next stop could be 80% lower. The countdown has already begun. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. The cryptocurrency market enters February 2026 under heavy pressure. Major assets have faced significant liquidations across the board. According to reports, over $714 million in total crypto liquidations occurred in a single 24-hour period recently, with long positions bearing the brunt of the selling. This broader market weakness has created a challenging environment for risk assets, particularly meme coins that trade with amplified volatility. Shiba Inu finds itself caught in this turbulent crosscurrent. The token has declined approximately 15% over the past week alone. According to reports, Shiba Inu is currently trading around 652 units with market capitalization hovering near $3.79 billion. The 24-hour trading volume stands at approximately $177.33 million, indicating sustained market interest despite the negative price action. The technical structure reveals a concerning pattern. Shiba Inu has been forming a series of lower highs since September 2025, when price peaked near 1,550 units. That peak now represents a distant memory, with the current price sitting roughly 55% below those levels. The descent has been methodical rather than violent, characterized by grinding lower with occasional failed recovery attempts. Market sentiment indicators paint a similarly cautious picture. According to data, the broader fear and greed index has been showing extreme fear readings around 20, reflecting widespread uncertainty among participants. This emotional backdrop creates an environment where technical levels become even more critical, as emotional selling can accelerate moves beyond what fundamentals might suggest. The macro environment compounds these challenges. Central bank policies have maintained tighter liquidity conditions than many market participants anticipated entering 2026. This reduced risk appetite particularly impacts speculative assets like meme coins, which rely on abundant liquidity for sustained upward momentum. The critical development dominating Shiba Inu price action is the ongoing test of a multi-year support level that has defined the token's structural integrity. According to analysts, Shiba Inu is currently retesting a major weekly support zone at precisely 667 units. This level represents the lower boundary of a parallel channel that has contained price action for years. Compounding the technical tension, exchange activity has shown concerning signals. According to on-chain data, a major exchange moved 162.87 billion Shiba Inu tokens into a hot wallet recently. This marks the first large inflow to the exchange since early January 2026. Such reactivations of dormant exchange reserves often precede increased trading activity or potential liquidity provisioning that could introduce selling pressure. However, countervailing forces are also at play. Approximately 101 billion Shiba Inu tokens exited centralized platforms in a single 24-hour period. This substantial outflow suggests holder conviction and reduced immediate selling intentions as investors move assets to private custody. The moving average convergence divergence indicator presents a more challenging picture. The MACD histogram shows bearish momentum with readings near negative territory. The MACD line remains below the signal line, suggesting continued downward pressure in the immediate term. This bearish crossover has been persisting for several weeks, indicating that short-term moving averages continue to lag longer-term averages. Moving average structures reinforce the bearish technical setup. According to reports, the 20-day exponential moving average sits at approximately 751 units, the 50-day at 792 units, the 100-day at 859 units, and the 200-day at 997 units. Price currently trades below all these key averages, confirming a firmly bearish structure across multiple timeframes. market experts have been weighing in on the precarious technical setup with varying perspectives. According to recent commentary, Shiba Inu shows mixed signals with the RSI at neutral 41.65 and bearish MACD momentum. Technical analysis indicates potential upside toward 850 units amid the ongoing consolidation phase. According to research from mid-January, analysts maintained a target of 850 units by month end, representing approximately 25% upside from current levels. This analysis identified this level as a reasonable expectation given the technical structure, though noting the challenging broader market environment. According to whale flow analysis, documentation shows 406 whale transactions above $100,000 during the fourth quarter of 2025, marking the highest concentration of large activity in months. Analysts argue this behavior historically precedes directional expansion, though the direction remains dependent on broader market leadership. The exchange supply dynamics provide crucial context for these predictions. Shiba Inu reserves dropped from 140 trillion to 82.2 trillion tokens recently. This 41% reduction in exchange held supply suggests reduced immediate selling pressure, as fewer coins remain available for liquidation. According to recent analysis, trend indicators remain weak, with expectations for further downward movement towards 734 units and 720 units as key downside levels to monitor. The assessment confirms lack of buying strength in current conditions. The immediate outlook for Shiba Inu hinges entirely on the resolution of the current support test at 667 units. Over the next 2 to 4 weeks, traders should expect elevated volatility as this level undergoes repeated testing. The most probable scenario involves a continued consolidation range between 650 units and 850 units, with directional resolution depending on broader cryptocurrency market leadership. In a bullish scenario, successful defense of the 667 unit support could catalyze a relief rally toward the 850 unit resistance identified by multiple analysts. Achieving this target would require approximately 25% upside from current levels. Such a move would need confirmation from RSI breaking above 50 and MACD histogram turning positive, coupled with volume expansion on breakout attempts. If 850 units breaks convincingly, extension toward 950 units becomes possible. The bearish scenario carries asymmetric risk. Failure to hold 667 units would likely trigger accelerated selling toward 550 units initially, with potential extension toward the 300 unit zone mentioned by analysts. Such a breakdown would represent an 80% decline from current levels and would likely coincide with broader market deterioration rather than isolated Shiba Inu weakness. Historical February performance offers a potential tailwind, with the 9.26% average monthly return providing statistical support for bullish positioning. However, past performance offers no guarantees, and current technical conditions appear more fragile than during previous February rallies. The ecosystem fundamentals show parallel developments. According to recent reports, the Shibarium Layer 2 network received a significant toolkit upgrade, including automated token burns and concentrated liquidity features. These enhancements could support long-term value proposition, though near-term price action remains technically driven. Where do you see Shiba Inu heading over the next month? Will the 667 unit support hold for a bounce toward 850 units? Or are we heading for a breakdown toward 300 units? Drop your targets in the comments below. The market never rewards hesitation. Whether Shiba Inu holds this critical level or breaks down, the move will likely be swift and significant. Stay informed, manage your risk carefully, and never invest more than you can afford to lose. Subscribe for updates as this situation develops.